AMD is very important, right? Very important, right? Because he's showing a support level and he's also showing how it became resistance, right? So that line is actually touching at least, I want to say like almost 6 times, right? So that's a very good level, right? So whichever day that was it Tuesday? On Tuesday, it bounced off that line, you know. Then on Wednesday, it went straight below that line, tried to come back up. It got rejected pretty hard, flushed all the way down to 88 by open on Thursday. And, it's trying to pass that resistance again. Hopefully we can clear 92 tomorrow. So, I'm trying to look for my pencil so I can draw on this thing before I. Give me a second.
And this is on the daily chart, right?
This is on a 5 minute.
Yeah.
There's also a nice triangle on this. What you want to do the previous day is you want to mark your high and lows of the previous day, like the Friday, right? So you want to mark your high of the day, low of the day, your close of the day. And then when you get your pre-market levels, like we have afternoon hours right here, but once you get your pre-market levels, like let's say, like think of this as Friday but not open, you would mark your high of the pre-market, low of the pre-market. Once it breaks that with volume, that's your confirmation to get in. Like the levels that I give out, it goes based off on these. So whenever it breaks the level that I gave out with volume, with rising volume, like here you have rising volume of the break of this level, you would get an in right here, and then you got it now like over here at the top of the previous day high as a target. You use the previous day as a target, like if it's high of the day, and then the low of the day as a target if the stock is going down. If it goes below this point, you could use the previous low of the day or the previous levels of the other days as a target as well. So yeah, you want to mark your pre-market levels, high and lows, previous day low, previous day high, and then you can also have other different levels if you want to mark it. Just important lines like this one. Support, resistance, broke it came back right back down, and broke it again, went back out. This level right here is an important level, like Nightshade said. Support turned into resistance. Right here is our resistance for tomorrow. Break of 92 will easily give us 94s. And below 91.20s will easily go back to 90s and 90.30s. These numbers don't come out of nowhere, so you got to make sure you draw your support and resistance lines. That's pretty much it. Like you can pick any stocks and do it on. Same thing with this. Like if you were watching this on Friday, you would mark your. But I gotta turn off this. I know Beyond doesn't have a lot, but high, the low. If there's a big gap in between, you want to mark like in the middle of it. So you see how this is like a big gap, right? It's like almost $2 gap. Yeah, almost $3 in pre-market, right? That's big, right? So what you want to do is you want to go and cut it in half. Like you want to make an aggressive entry and aggressive line right here. So you would go and choose this one right here. The previous support, it was just playing sideways that day, and then it's also lining up with the support right here, and it broke out here as well. And you can use this level. This is an important level. So if it breaks below this, you get puts. And if it breaks above this, you would get calls, and use this as targets, like the previous day's levels as well. So like for tomorrow, we get a different level. You're going to have to mark your pre-market low, pre-market lows, pre-market highs and lows, and previous day high, previous day low, and your close of the previous day if you want. Those are like the 5 things: pre-market low, pre-market high, high of the day, low of the day, and close of the day.
Pretty much, yeah. I mean, also, you guys want to look at how stocks react when you get over certain levels, right? So, for example, next, this might not happen tomorrow. I don't know, but you guys see how we passed this. We got a huge explosion up this way, right? So, but like for example, if you guys use this level, right, you would have gotten caught in a false breakout, right? So the next time I see like beyond calls over 138.5, for example, I might actually ignore this. I might say that, every single time we test the level and we fail, we actually have more data, right? So I'm just talking about this and right here for now. Sorry. These two levels right here, and I'll get to this in a second. I'll get to that 147 one in a second, right? But if you guys see this, for example, before we might have called beyond calls over 138, but now I'm gonna look for a clean break over these two lines, and I'm gonna guess that it's gonna give me this line next time, right? Or somewhere around this area, right? Um, and next time it kind of worked out. If you take this line and extend it all the way back down to here, you guys can kind of see how when we passed it, we got a nice pop and we started selling off around there. Same thing, Jacobus line over here. Then the next morning, when we actually passed it, we got a huge explosion all the way up to 147, right? And then I think that was a sell-off day. That's when SPY tanked, right? I think we actually had puts that day. So we actually did end up selling off. But, as we keep inching upwards, right, in this upwards price channel or the beginning stages of an upwards price channel, what you're going to see is that once we do break past it's 141, or let's just call it 141.75, just give ourselves a couple more cents to be safe. Once we do test this level again, it might not be tomorrow, it might not be Tuesday, but we should have a pretty healthy explosion all the way up to here. And the only level, just from looking at this 5-day chart, the only level I'd be selling at is probably right here, just because we did get a pretty aggressive bounce right here. I'm not going to do it now, but if we did go back in time, I'm almost positive that we would have seen this level somewhere before. There is definitely a reason why we bounced so heavily off that line. But right now we've just charted pre-market levels without even seeing pre-market, right? And then tomorrow, what you guys can do is, find out where the pre-market highs and lows are. Look for you have heavy resistance, and then just play it above those highs, right? So, and then you guys would obviously start selling here, leave your runners up to here, right? I think it's pretty simple. It's just the application of it, and also make sure to delete your lines. After you guys don't want to have like 1,000 lines on your chart. The only line of this chart that I'm probably going to keep is maybe that I might have drawn like a top line here. I might keep this one because it's very, very important. You guys see how many times it's touching, right? But the other lines are pretty irrelevant. If you guys want to keep all of them, you can make them different colors. This is what we call key levels, for example. So, yeah, anything above 140, let's even call it 142, should give us 144. Anything above 144 should give us 147, right? So, like Casa just said, these numbers don't come out of nowhere, right? We're finding these numbers by doing this, and again, as you guys get more experience, you can kind of tell which numbers might be more important or applicable, right? Now, this all looks pretty simple and looks pretty easy, but you guys do have to take into account that to improve your win rate with this, you guys do need to be looking at longer time frames. Look at the overall candlestick patterns, right? So if you guys want, if you could check like the 30-minute or the hourly, you guys can see how Beyond ended pretty bullish, right? I guess it looks like it's trying to retrace, but right now it looks pretty bullish. Again, needs to hold 136, right? Ideally, we can actually get a bounce off that line right there. Again, we don't have to draw it, but if these red candles can't really pass that big volume blue candle over here, then we're probably going to get a nice pop in the morning, right? So what you might see in the morning is Beyond start to consolidate around this area. Maybe some weird candles. Looks like something else, but like, you guys see the candles just kind of consolidating there. And then if you guys see Beyond, like even touching this top line right here, right, trying to break out, right? Look at these wicks, right? Look at Beyond try to test these levels, right? I mean, these wicks show price rejection. That's why they're called wicks, right? That's when the price was rejected. So you guys want to look at that. And then your target can even be anywhere either on this line or right on this wick, right? Remember, the candles tell a story, right? So look for, we can't say exactly where to sell, but as we approach these zones and we see volume slowing down, we want to get out before the reversal. Because if you guys even get in here, and then you guys get caught on this drop, you guys actually might end up selling your contract for a loss. It's pretty stupid with options, right? But you guys want to be selling on upward momentum if you have calls and downward for puts, right? So Brion looks pretty neutral right now. I do want to see pre-market levels to kind of see what's going on. All our daily charts are going to be messed up just because of all that, all the turbulence with, last week stimulus talks and whatnot. But yeah, I mean, it actually still looks pretty bullish, right? We have a nice doji right there. Looks like it's ready for another move up. MACD is still below the zero line, which is a good sign. Just needs a bit more volume, that's all. But yeah, that's about it for pre-market levels, right? So charting wise, that's all you guys really have to look at for finding breakouts. And we can look at some more stocks as well if you guys want. If you guys were in the divergence class, that's another thing you want to look at from the previous day. I know a lot of you guys were asking me about the Netflix puts play we did at the Bell the other day, and also the Roku puts. Those are all divergence plays. Very easy on the 15-minute chart. So you guys want to look at that. Yeah, Roku's a stock that loves to do these breakouts in the morning, right? A lot of stocks repeat the same patterns. So Roku is one of those stocks that loves to run at the bell, and then just dump again. I've very rarely seen the stock dump at the bell first, but I have seen it pop and then dump like 10%, or not 10%, maybe like 3 or 4%. So just be careful of it. All the stocks tend to behave the same at the bell. Beyond loves to do a 3-bar play, for example. Again, I told you guys these are things you'll just learn with experience. But what we just talked about is applicable to any high volume stock, right? So obviously don't try this on something like Walmart. It's just not going to work out for you, right? These stocks don't move with the bell.
Craig,
So-
question with divergence. You said you can't really use it for pre-market, right?
I don't really look at it for pre-market, no. I don't look at extended hours when I'm looking for divergences or anything else.
So how do you set up those plays like at
Wait, give me a second, actually. Sorry, hold on. Stop losses, yeah, it's a very important thing, right? Because a lot of the times we might have a stock ready to run at the bell, but all of a sudden when market opens, just dumps $2 and you guys have no idea what to do, right? So if a stock doesn't pop at the bell, then just don't chase it, right? You have two alternatives. You either have to wait for it to come back up and start passing your level, right? Or you gotta look for a bounce point, right? So here's what I mean by that. Twitter, for example, right? So this did not open green at the bell, right? I mean, opened, right? And then obviously dumped down almost $1, right? At some point, the trade was down there. So you guys want to look for like a bounce point, right? So the obvious bounce points here are obviously right there, right there. That could be one, but I wouldn't count on it, right? So you guys kind of want to draw these lines or mentally look at that for a bounce point, right? Obviously, it's hindsight, it never got there. But one good indication, we got a nice piercing line candle right here. So on that candle, you guys zoom, I can't zoom in, but oh, yeah, there you go. Right, so this is your confirmation candle, right? Reason is you broke resistance, right? That was your main resistance, right? This is like your safe entry, and breaking above this is really your safest entry just because you have that red candle there. Again, these are just banks playing around. It's not as significant. The real resistance is right here, guys. As you guys can clearly see, the candle's bouncing off that level. But above here is really your safest entry, right? And then I guess you guys can use after hours as your next target, which actually lines up perfectly with that red candle for that semi 3-bar play right there. And then as far as picking targets, if that's all-time highs, which I think it actually might be, then yeah, this is actually all-time highs for Twitter. That's when you want to use fib lines, right? Again, most stocks we're playing breakouts of the bell aren't at all-time highs, so I'm not going to go over fib lines right now. That's going to be for another lesson. But you know, this is a textbook breakout play, right? So then tomorrow, right, we're going to be watching this 51.7 line the most, right? Right there, right there, right there, right there, right there, right? So again, look how many times we bounce to test your significance. Your stop loss is going to be, you know, if you just fall below a bounce point, right? Let's say that you did get in this trade on this candle, and then all of a sudden it dumped, right? Your stop loss should be your entry, or at least the bounce point, right? Your stop loss is going to be like if you fall well below these wicks. If you guys are very confident about your trade and there's no reason for it to go down, like SPY is up and the stock doesn't have any bad news or any downgrades, then you guys can probably wait for your next bounce point, because again, sometimes these stocks will bounce aggressively back up and you actually might double your contracts. This can be a good point to average down. But you guys want to be careful, right? Because if you do average down and you actually dump below this, you guys are going straight down to here and you've just thrown all your money into the market, right? And this is especially bad, not because you lose a lot of money, but because if this is like one of your first plays, then you're already in a bad state of mind and you're not going to make good decisions. You're going to get greedy, right? If you guys throw away $1,000 in the morning trying to play a bounce that fails, I'd encourage you to get out early, cut your losses, and find the next play, right? Because the amount of time you guys spent sulking over the fact that your trade didn't work out, there's actually a million other trades that look exactly like this that you're missing, right? And after like 10 o'clock, these are all gone, right? All of these big spikes happen in the first 30, 45 minutes. And then at that point, you kind of just stuck scalping for pennies, right? So the morning's very important. Again, you can only really get good at this if you're prepared, right? If you don't have these charted, you're just going to be scrambling, right? So yeah, that's pretty much it. If you guys have any questions, you guys can put them in the chat. An important thing about stops, I know we say it all the time, but please try and make it mental, right? If you guys put an actual stop loss order in, the market makers are going to hunt for your stop loss. You know, all of us say it every single day. These wicks right here are the banks taking out everyone's stops, right? Remember, banks are not against you. Banks just want more shares for a cheaper price. That's it. Just ride the wave with them, right? I wouldn't get in this trade. If this trade didn't bounce off here, so I wouldn't get in this trade until around here. Maybe even this candle for safety. All right. And then I would have gotten out of this trade somewhere around here, right? Only because of this resistance right there. And that was all-time highs. That's the only reason. Anyone who bag held up to here, they probably had fib lines, but I would have gotten out personally at resistance. So, yep, that's about it. I'll stick around for 2 more minutes, check the chat. If you guys have any questions, let me know. Yeah, this is not a very indicator heavy class, right? It's not really a strategy, just kind of going over basic charting, how to set up in the morning, how to be more level headed. You guys just want to be paying attention. Most important thing is don't force levels and cut your losses, right? Playing bounces can be very, very lucrative because those can double almost instantly. But you guys do need to respect your stop losses so you guys can find more trades.
All-time high is 50 to 93s.
All right, I think we're good.
Do you not take emotion into trading?
I mean, there's always going to be emotion there, but just stick to your plan. Make a plan, first of all, and stick to it, right? This market does not care about you. The market wants your money, right?
Yeah, just set your levels. If it breaks your level, get out of the trade. Don't hope for it to go up or go down, because when
Yeah.
you hope, you lose money.
Exactly.
Like I called out Twitter to get out. As soon as I seen it break pattern, as soon as it broke this, I got out of the trade because it was forming a bull flag and then it broke out of this. I just said, I'm out of here.
Yeah, if you guys stayed in this trade, you would have seen this candle, said, I might go up, and then it gets destroyed again. Then you're gonna sell, it goes up again,
Oh,
and you guys,
but
okay, I might stay in, maybe it's gonna go to all-time highs.
yeah,
And
right.
then at that point you're down 60%. And that's it. Money's gone, never coming back.
Yeah, easy those.
Do you guys swing later in the day because when the market's cooling off? It's less about cooling off and more about just it's the end of the day, so people have less time to screw with the prices. Um, yeah, I don't look for swings until the last 30 minutes. Reason is I like to use bigger time frames to kind of guide my swings. So, I'll look at like if it's like 345, then I'll be looking at the previous candle, and then I'm gonna kind of I just find out where the next candle needs to close for it to be swingable, right? So if we're gonna close on like a bullish engulfing candle, for example, I can just pinpoint what the stock price needs to close at for me to have it be swingable. If that kind of makes sense. Um,
So there's a divergence on the 15-minute HD.
HD. Um, what are you looking? What kind of divergence? Just say in the chat. I don't see anything.
I don't see it.
On the 15-minute.
Yeah, I don't see it, bro.
Yeah,
Yeah, they're matching. I don't see it. RSI is
yeah,
doing
that's pretty good.
something. This is pretty bullish, I think.
Yeah, I like it a lot. Yeah, so even for HD, let's go back, zoom in for a second. Just want to show, yeah, zoom back in. All right, so you guys see how it's touching, right? I want to see HD bounce off this level, right? First reason, that is the demand zone. Second of all, you see these wicks touching right here. See how we're kind of bouncing off? We kind of tried to break through it and we found like a lot of volume there, right? So we're kind of looking at these levels. It's kind of hard to explain, but you guys just need to look at the wicks and just look at where the candles are forming, right? The bigger the candle, the more usually the more volume, not always, but also the bigger the conviction of the move was, right? So like a big red candle after like a small green candle means that sellers really want to push it down. So this can be heavy resistance anywhere from here to here. That can be like a nice little zone to watch, right? So, personally, I might not go long until I pass the tops of these candles because anything here is at risk of just getting dumped on again, right? But if HD holds the 264 level in the morning, we're already set to start running. That's kind of like our foundation, right? Again, keep in mind that HD has had many price upgrades during that downtrend. So I'd be very surprised if we don't see a push back up to 280s very soon in the next week or two. All right, cool. I'm not watching time and sales at the bell actually. I do that more for scalping.
I only watch those for like big levels for it to break. Otherwise, I just watch volume.
Yeah. Yeah, I'm only watching time and sales level 2 in the order book if I'm at like a critical level. And critical level meaning like levels I've charted before, not like the pre-market levels necessarily. I mean you can, but I find that level 2 is pretty useless right at the opening bell. Unless you're passing a major resistance point. So for HD, I'd be looking at level 2, like right there, see how the orders are kind of forming. And when you do eventually fill that gap. Yeah, stock has a lot of work to do. Jesus Christ. There.
I think it's going to
It's gonna
reject
be-
as 271. I had fill lines on
Yeah, I think so.
it right here.
All right, guys. I will see you pre-market. I gotta do some charting, get to bed. Hope you guys learned something. Yep. All right. Good night.
I
Yeah,
will
no problem,
post.
guys.
I'll be posting the link in the Priority Mentorship channel. Make sure you hit that sub on the YouTube channel.
Thanks, guys. Much appreciated. Good night.